Good morning. Today is Monday, December 1st. Hope everybody had a fantastic long Thanksgiving holiday weekend, and we're back in the saddle today. If you recall, last week I was talking about the ETF GLD gold, the Spider Gold Trust ETF, and as we all can see, gold's been down for quite a while, right? Been down for quite a while. Had a nice pullback here, nice short signal in this ETF coming down here. Pullback up to that 50 exponential right in here, right? And then what we did was the market started to really contract up in here. As you can see, had an inside pattern here, followed by another bar with a marginal new high, and then on Friday we had another inside pattern here, and this was all indicating that the market would probably move lower as long as the market could take out Friday's low. Well, as you can see, the market gapped down here. So it gapped down here on Friday, right? So that wouldn't be a trade since it gapped down through it, but if you're looking at gold and trading the futures contract, that traded right down through it. That's the good thing, that trading futures, and since gold trades at night, you can take advantage of those moves, because if the market really makes a move at night, you're going to see a gap in the ETF, okay? So right in here in the futures contract, that short signal would have been at 1194.40, 1194.40, opened up at 1197.80 and traded all the way down to 1163.90. 1163.90. That's a huge move. That's 21 points down, okay? And then we had continued that move last night and dropped further to 1141, another 20 points down from Friday's low. So big move in gold to the downside, whereas again on the ETF you would have missed it because of the gap, okay? Let's take a look now at the IWM, the Russell 2000 ETF. If you recall, on Friday the market sold off pretty heavily, right? Closing right here. It looks like the market's going to open up at about 116. I'm looking to buy weakness right down in here. Between 1115 and 1114 is where I'm looking to buy some IWM, okay? Let's look at the SPY now. Look at the SPY. Spider S&P 500 ETF, 1-to-1, right? Now, this is all-time new to high territories up in here, but we've been consolidating. And if you recall, on Friday, the SPY made a new high by 3 points only. Look at this. Went to 207.87, taking out the 21st high of 207.84, closing mid-range, and we're going to gap lower today. Now the S&P 500 looks like it's going to open up about 9 points lower, which is equivalent to about anywhere from 80 to 100 points on the Dow. So the market's opening up lower today. I'm going to watch this very closely to see if we can sustain that gap. If we can sustain that gap without trying to fill that gap, then I believe the market's going to move lower, and it's going to try to fill this gap between 205.98 and 205.58. I think we could go lower, maybe try to push into that blue action zone right in here, okay? But it all depends. So when the market opens lower today, we want to see if the market can sustain that gap down. If it can't, it starts to fill that gap, then I think we could go higher. But I think we're overdone. It's the beginning of the month, and we're going to get some. I think we're going to get some short selling today, some profit taking here at the beginning of the month. But again, if you take a look at the last 4 trading days, from November 24th to Friday of last week, the half day we had on Friday, the day after Thanksgiving, Market really has consolidated, so the market's going to push in either direction. Let's watch it very closely, okay? Now, tomorrow I'm going to start an entire series, another free training series. I'm going to have 4 videos starting tomorrow. So I definitely urge you to watch those videos. I think you'll find it to be pretty eye-opening. And you can leave blog comments. I'm going to answer all your questions. But tomorrow, Tuesday, the 2nd of December, I'm going to start with a series of trading ETFs and why you should be seriously thinking about trading those, okay? Have a great day, and I will be back with you tomorrow. Bye for now.